The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone, and welcome to the April edition of Digging into the BI. This is where members from the Maryland, D.C., and Virginia area get together and look at the latest issue of the member-only magazine, the BI. It's part of the Better Investing. And here are the four stocks we're going to be looking at tonight. It's going to be Brown and Brown, followed by Microsoft, then Hershey, and Eaton. So we have four new presenters going through tonight. We had a little bit of a problem technology-wise, but we're going to make our way through it. We're glad you're here. We have a really nice registration for everyone here. And Kent, if we go to the next slide, we'll just keep going. So this is our standard disclaimer. We are doing this presentation for educational purposes only. We believe, as Better Investing does, that you should conduct your own review and analysis of any company before you make an investment decision. We are going to be talking about securities. We may own them. We will try to alert you to that. But just remember that we are not endorsing or promoting any of the websites or products that we're going to show tonight when we make our stock presentations. And if you see down below where the blue underline is, this session will be recorded and will go up on YouTube later on today. We're just uploading the files, so if you look over there and you can't find them, don't worry about it. We'll have them up here by the end. We'll give you a heads up when they're there. Next slide, please. So again, most of you I can see in the audience are regulars, but in case you're not a member of Better Investing, here's a little information about us. And if you download the handouts, if you're seeing this live, all those blue underlines are hyperlinks, and they will take you to the place that will talk to you about Better Investing and our form of long-term fundamental investing. All of the presenters tonight were from Maryland, D.C., or Virginia, and we're all volunteers, and we're doing this just because we think this is fun. Next slide. We're also up on YouTube, as I said. Here's the link or the location on YouTube for it. You can also search under Digging into BI to see it. We ask that if you go there and get the free education program, and again, you can share it with your club members, share it with people that you're maybe thinking of joining your club or just your family. They're free, that's fine. If you get the slide deck here live, you can share that with anyone as you so choose. But we ask you in return to like the videos on YouTube, share the videos, and subscribe. That's the way the algorithm works, and we want to get there. We've been getting a nice little steady increase, and we're trying to see if we can get to 250 of you. We're at 222. All of our presentations over there are organized into what are called chapters, so you can just advance to the study that you want to hear about, and you don't have to listen to all the rest of the stuff. Next slide. So if you are having trouble taking a look, we really haven't had anyone ask this in a long time, but there's some videos on how to sort of get your started on GoToWebinar. If you're looking for stuff under help, a lot of times you're going to see if you have some trouble, it usually is under the computer audio. That's that sort of purplish blackish line that's going across. And we will have the handouts, and that's you're going to see them where that green line is. Eventually, there'll be 4 completed SSGs up there, as well as this completed slide deck. And again, you're welcome to share that with whomever you so choose. Next slide. So why we're doing this is that we're trying to be able to show people how to be able to use the resources of Better Investing. All of us are members of Better Investing. And there's an opportunity for you if you're not a member or if you're trying to recruit someone to join your club, that blue underline is an opportunity to get a free 90-day trial to Better Investing so you can sort of see the resources that are there. We're doing this also to be able to show people how to be able to use the form in a sort of a live action operation. We're trying to show you the best practices for a long-term fundamental investor. And we're also trying to promote the 2 model clubs that are in the Mid-Atlantic chapter, as well as the 2 chapters themselves. This is put on by the Maryland chapter and the DC Regional. DC Regional includes DC, Montgomery County, Maryland, and the entire state of Virginia. And if you are in that area and you're not a model club, we're going to show you the Club Connect program. And you don't have to be in Maryland, DC, or Virginia. We're glad to have people from outside that area. It's what makes our community so great. Next slide. So in just over an hour, we're going to go over 4 stocks. We're going to do the 2 stocks that are featured in the member-only magazine, the Stock to Study and Undervalued feature, and then we're going to have 2 more that have been presented where they found the stock idea through their Better Investing subscription. So they can find it either through a first cut or one of the screening tools, ticker heat map, all of the choices that are down below. And 3 of the 4 stocks tonight are a part of the BI Top 200. I'll talk to you about that in just a moment. Next slide. So here's how you can find stuff. In here, this link here, the Home About Us news release, this is free to anyone, and you can see the upcoming stocks that Better Investing will be featured. The stocks that we're looking at tonight were all announced on January 30th, so just over, what's that, a little over 2 months ago, and you can sort of see how they what they thought about it. So you can get a sort of a jump on things going on. They already have stuff for the next 2 months. Take a look at it. Prepare your own SSG and come back next month, and we can talk about it when we get to the end of our presentations. Next slide. We also, if you're a BI member, don't forget to get those future announcements. Again, most of you are obviously signed up for our DC regional stuff, but if you are a member and you want to know how to get more announcements, if you go up to the top where I have the red circle for my account, you click on that and you come over to the left side where the screen capture is. I have the red underline, and you're going to go down to email, product, and subscription information, the green circle, and that will open up that green box that I have over on the right side. And you can sign up where the arrow is for the local chapter news, as well as where I have the yellow highlight, the BI Weekly e-newsletter. Make sure to click on that, and you can then hit Save Changes, and you will get all the stuff that's coming out of headquarters. Let's go to our next slide. So here's the latest from the BI Weekly newsletter. This is for members only, but it highlights a lot of stuff that's going on nationally. It comes out around the close of business on Thursday. And if you signed up for it and you're not getting it, check your spam filter. But they have 2 that are coming up. One, I think this week, the Ticker Talk, and then the other one, which is the Stock Up, which will be towards the end of the month. But I always find this is a great place to be able to find ideas, to be able to share with your club, to be able to talk with other people, and to be able to get them involved. So take a look at those things and join us. Next slide. You can also connect with us on Facebook. The DC Regional and Maryland chapter have a joint Facebook page to be able to see stuff that's coming on. Again, you don't have to be a BI member to see these things. We're trying to reach a larger audience, but go ahead and take a look at that and see some of the stuff that's going on. And if you're in the Maryland, DC, or Virginia area and you want to tell us about your club, put up a Facebook post of your own personal choosing and link it to the DC regional chapter, and it will get a greater coverage. Next slide, please. Here's the stuff going on with the Maryland chapter. Normally we'd have someone from the Maryland chapter tell us about it, but all the folks here are from the DC regional chapter this month. But the Maryland chapter has their in-person SSG class this weekend. It's down at the College of Southern Maryland in Prince Frederick. And you can sign up for that to be able to go there. They also have their stock pickers contest that's going on. You have to be a member of a BI member in the state of Maryland to take a look at it. And I just noticed they're having a meet and greet with wine tasting on May 3rd. So go to Laurel, Maryland, and drink wine and talk stocks. Sounds like a great combination. Next slide. Cheryl, are you able to tell us about this?
Yes, I am. As soon as the slide gets pushed forward, is that my club or
this is DC chapter? DC chapter.
Oh, just the DC chapter. Okay. The next digging into the BI is going to be the first Monday in May, and is again the 7 to 8:15. We have the Model Investment Club, McNova. and their next meeting is on the 8th of April, again from 7 to 9 p.m. If you go to local events for the DC regional chapter, as you can see with that blue arrow, that is virtual, and you can register and go right into that. And again, 7 to 9 p.m. And then we have the MCMC Model Investment Club in Maryland, and their next meeting is on the 16th of April from 7 to 9 p.m. And again, go on the DC chapter and you'll find the link, and then you can click on it and go to that meeting. Both excellent clubs.
Thank you. Let's go to our next slide, Kent. Cheryl, it's back to you, and now you get to be able to tell us about your club.
Okay.
McNova.
Model Club of Northern Virginia. I'll get it straight. Again, as I was saying, they're going to meet on the 8th, and they're going to be discussing the new stocks are going to be, whoops, sorry, I just lost you there for a second. All right, stock to study is Discardi Systems Group. Education is Living Off Dividends. The point of contact is mcnova@dc.betterinvesting.net. And there is our link right there. And we are definitely open to visitors. Please come by. Let us know you're there. And we've got 14 partners, but we can always use one more. Back to you, Kevin.
Yeah, it's tomorrow night. So hopefully you may be out cruising, so you may miss it. Let's go to our next slide, Kent. And so this is the club I'm a part of. It's the Montgomery County Model Investment Club. We have 6 partners. The picture there is a combination of 2 clubs, and Rudy will tell you about that in just a moment. But we meet on the 3rd Wednesday of the month, 7 to 9 Eastern. There's the link to join us on GoToMeeting. And we've been going through the portfolio tools that are in the BI system. And then our stock to study is Arthur J. Gallagher and Company. And so please come and join us. We are always looking for interested people to hang out with. Let's go to the next slide. And Rudy, this is yours. And I know I made a mistake on that, so you can correct it.
Oh, I'll correct that. We're Pinnacle Group Investments, and we meet on the 2nd Saturday of the month. So our next meeting is actually this coming Saturday, which is April 12th. We meet at 10 a.m. It's online. You can look at the point of contact or meet at AOL.com. We welcome members. This Saturday, we'll be studying Chapter 3 of James Clear, Atomic Habits. And the stock study this week is Brown and Brown. Thank you.
And you'll get a preview of that tonight. Next slide. Okay, our newest presenter, Daniel Parker. Tell us about your club, Millionaires in Training.
Yeah, good afternoon, everyone. So we're part of the DC regional chapter, and the club I'm a part of is called Millionaires in Training, which we affectionately refer to as MIT, the MIT Investment Club. We started in 2019 with 13 partners. We meet every 2nd Saturday of the month from 10 a.m. to noon. And prior to the pandemic, we used to rotate around and meet in person. However, when the pandemic came along, we went online, and we've been doing that ever since. This coming meeting, this coming Saturday, April 12th, the education is another method of technical analysis. And the stock study hasn't been determined just yet, but we will be meeting anyway. And of course, there's the email if you want to reach out to us. And visitors and others are welcome to join us. Thank you.
Let's go to our next slide. And last but certainly not least, Richard, tell us about your club down in Virginia Beach.
Well, as you can see, we're a club of 20 members. We're meeting this upcoming Thursday, April the 10th, and we are live and in person, what I affectionately call lip service, live in person. We're meeting at Gus and George Steakhouse Our stocks to study, in addition to member reports, and each of the members has a stock that they follow. And in addition to that, we have two stocks for study, Microsoft and MasterCard. And so if you're coming down to the Virginia Beach area, give me a shout out. There's my point of contact information.
Thank you very much, Richard. Let's go to our next slide. Cheryl, can you see this, or should I take it over?
No, I've done it before, so I think I've got it down pretty much. There's a program that Better Investing started not too long ago called Connect, and it is a wonderful program to enable clubs that are looking for new members to get their information out there for people, as well as individual investors that are looking for a way to connect with a club. And so I encourage you to go look at the Connect program. It is on the Better Investing website. And I think, you will find it very helpful if you're in one of those two categories. So look under Club Connect, and that will take you to the program so that you can fill out the information necessary to attract either a new member or to look for clubs that are in your area. Back to you, Kevin.
Thank you. Let's go to our next slide. And so this is digging into the BI, so we like to be able to tell you what's going on in the latest issue of the magazine. You can get this remotely. You don't have to wait for it to hit your have the postman deliver it to you. You can get it on your computer, laptop, and the like. And also, there's some place to take a look at it. And April is always when they look at the most popular stocks that are in investment clubs. And we'll talk about that in just a moment. But it's always a great location and a great place to find some good ideas. Let's go to the next slide. And one of the things with the Learning Center, we're always featuring the stock to study and undervalued feature, but to be able to know how to find the stuff on the Better Investing magazine is if you go to Learning Center and underneath it, you see where I have the blue highlight there in Better Investing magazine, you can do it. The green arrow is towards the Better Investing magazine for mobile devices, different sign-in. And then also, if you ever read those articles, where they always say there's additional resources online, that red arrow gives you where the analyst reports and other information. So you can always use that as an additional place to be able to get information to help complete your judgment. So take a look at that. And then you can also get to the magazine by in the center where the green background is on the View magazine issues. That's where you can see the latest issue of it. Let's go to our next slide. So here again is this issue. I'm featuring the cover story, and this is the annual listing of the top stocks held and stuff. What they do is they use the ones as they've been reported to in the My iClub software. And I also, one of the things that's really kind of good is they feature it here where it says big movers in the top 200 lists, is that ones that have moved up a lot. Are ones to sort of take a look at. They're new and rising stocks. It may be a great place to find some ideas, see what other people in our community are doing, and take a look at it. So this has been something that's been going on since I think it was 83, so a little over 40 years. And it's, again, a great place to be able to find stuff. And like I said, 3 of our 4 stocks tonight will be in the top 200. Let's go to our next slide, please. So we're also looking at upcoming events. Some of them were just this last weekend, but the Southeast Florida chapter has stuff on Vice investing. It's adult entertainment. It's free. It's going to be tomorrow night, so it'll conflict with McNova. But the people in Southeast Florida have always been doing a lot of good active stuff. I know North Florida's done stuff as well. Some of these others just happened last weekend. Like Northeast Ohio around Cleveland has done stuff. So always take a look at this. You can, and again, if you get to your magazine early, or if you use the digital version, you'll be able to see this stuff in time that you could be able to join them. And again, a lot of them are for free. Next slide. Well, we've been doing a lot of chatting here. Now let's talk stocks. So we're going to do the first two presentations in core, and we're going to do first, Rudy's going to tell us about Brown and Brown, and then I'll tell you about the stock study this month, Microsoft. So Rudy, why don't you get us started?
All right, thank you. Hello, everyone. The company I'll present is Brown and Brown Insurance, and I'm excited to walk you through how this company stacks up from a better investing perspective. By the way, the cheetah represents vision, swiftness, strength, and agility. Brown and Brown feel this embodies their company culture, and it's served as a symbol for Brown and Brown since the 1980s. So let's dive in. Next slide. I discovered Brown and Brown, and their ticker symbol is BRO. I discovered them through the Better Investing Stock Screener. I used a search criteria of greater than 12% 9-year sales growth, greater than 12% 9-year earnings growth, and greater than 0.9 5-year earnings per share R squared. Incidentally, an R squared of 1 shows that the earnings per share fluctuation is highly correlated with an index such as the S&P 500, and that helps explain any variation in the earnings per share for that particular company. I happen to be an SSG Plus when I use the screener, but the slides that I will show will contain screenshots from SSG Core. Next slide. Brown and Brown, they were founded in 1934, and they went public in 1933. Brown and Brown is headquartered in Daytona Beach, Florida, and falls under the financial services sector. It's considered a medium-sized company by market cap and is traded on the New York Stock Exchange. Among insurance brokers, it ranks number 5 in the US and number 6 in the world. And there are more than 500 locations in 18 countries worldwide with over 17,000 employees. Next slide. Brown and Brown had revenue in 2024 of $4.8 billion. And although it had significant revenue growth through acquisitions, the vast majority of the 12.9% revenue growth last year was organic. Next slide. Brown and Brown earns revenue primarily by offering insurance products and services to both businesses and individuals. 62% of their revenue stream is under products and services. These range from employee benefits to cyber liability insurance to home and auto insurance. They also have a wholesale broker segment that contributes 13% of its revenue. It's a commission-based operation where Brown and Brown act as a middleman between insurance carriers and brokers. And what's interesting is that they also manage insurance programs for other carriers covering both commercial and specialty lines. And this segment contributes a quarter of their revenue. Next slide. As I mentioned, their revenue is spread across 3 main segments: retail, national programs, and wholesale brokerage. Retail accounts for 62%, programs for 25%, and wholesale for 13% of total revenue. All the segments show positive organic revenue growth that indicates a strong performance across the board. Organic growth is the primary driver of revenue growth, which is the result of net new business. Next slide. Here we look at their historical sales, EPS growth, and pre-tax profit margin. BRO has shown consistent growth in both revenue and earnings, and that's a great indicator of business health. The pre-tax profit on sales has remained solid, and the industry comparison shows BRO performing above the median in several areas. From the list of top performers in the column on the left, It's important to note that many of the companies similar in revenue amount with Brown and Brown are privately held. Next slide. This slide continues the financial story with more detail on earnings quality and revenue consistency. Focus on the year-to-year consistency in sales, which is the first box. Now look at the earnings per share, which is the middle box. And then the percentage pre-tax profit on sales on the bottom. Now compare the historical growth rates. Those are the red boxes for Brown and Brown. And it's this steady growth and profitability that makes BRL stand out from many of its peers and the larger competitors. Next slide. The historical sales of Brown and Brown show a fairly straight upward slope. It's far more consistent, steeper, and higher than the historical sales of its peer groups. That's the black line. Next slide. Similarly, the slope of the historical earnings per share figures is steeper and more consistent than the peer group's average. And although their numbers have been historically lower, the trend line has it possibly moving above the peer group in the near future. And it's very nearly straight. Next slide. Here we begin to look beyond just the numbers and dive into how management has influenced company performance. Strong leadership is the hallmark of better investing candidates, and BRO is no exception. Make note that the son of one of the founders is a chairman of the board of directors, and the current CEO is his son. So the company has been passed down for generations, and the largest shareholder is a family member. So although it's a publicly traded company, the same people who grew the company from a two-person operation to what it is now, they're still extremely influential in decision-making. Next slide.
5 minutes, Rudy, 5 minutes.
Okay. Management evaluation includes return on equity and consistency of financial reporting, and BRO's leadership has a solid track record of maintaining profitability, navigating market shifts, and deploying capital efficiency, which build confidence for long-term investors. This is demonstrated by the graph for pre-tax profit on sales in comparison to peers. Next slide. Next slide. Return on equity also shows a consistent and stable track record. Even though you're on a 15% target, 14.9 over the last 5 years is pretty good. Next slide. We're still talking about evaluating management. So as a part of my due diligence, I also evaluated risk and debt levels, and BRO has managed to maintain a healthy balance sheet, which is critical in the financial services sector. And the industry average line in blue is included as an indication that although Brown and Brown's debt is higher than its peer group, it's still well below the industry average. Next slide. Another key piece is understanding how well the company executes acquisitions and integrates new businesses. And they've made several smart acquisitions over the years, and they've expanded their reach without compromising financial integrity. And this is the primary source of its debt. Next slide. With all this in mind, I began to formulate a forward-looking view of BRO's potential. I combined historical data, management effectiveness, and an industry outlook to build a 5-year projection. Using the trend line and value line estimates, 11% is my forecast for 5 years sales growth. Next slide. My estimate for earnings per share growth of 12.5 over the next 5 years is also consistent with the historical trend and value line estimates. And you can see from the graph that it most likely is a reasonable estimate based upon historical performance. The dotted line is the forecasted trend. Next slide. After eliminating what I consider to be an outlier, I used the past 5-year average high PE of 31.8 as my estimate for the next 5 years. Next slide. Similarly, I utilized the previous 5-year average low PE of 21 as the estimate for the next 5 years. And I felt comfortable using the 5-year averages for both the high and the low PE as estimates of the future because the graph of historical sales and PE is up, straight, and the lines are parallel. Next slide.
2 minutes, Rudy, 2 minutes.
Next slide. Okay. Here's a snapshot of Brown & Brown's 5-year potential. I estimated a return based on revenue growth, profit margins, and a reasonable PE ratio. This helped me determine if it's currently a buy, hold, or sell candidate. And you can see it's solidly in the hold zone, with the annual rate of return estimated at 10.3%, using my forecasted 5-year high PE ratio of 31.8. Next slide. Looking ahead, business leaders are cautiously optimistic, and they anticipate performance in 2025 to remain in line with late 2024, which was very good. And of course, natural disasters are becoming more frequently, and that's being monitored. However, the company's strong cash flow and balance sheet positions them well to acquire more quality businesses. Therefore, it looks good going forward into 2025. Next slide. So to wrap it up, BRO is a well-managed, medium-sized company with solid growth prospects. However, it's currently trading above its 5-year average high PE, so I view it as a hold for now. A pullback to around $101 would make it more attractive with a 15% total return potential, and it's definitely worth keeping on your watch list. So thank you for your attention.
Thank you, Rudy. Appreciate it. Well, just to be able to let you know, Cheryl's been putting in the handouts. Like I said, we got a late start here. We have the 4 completed SSGs in there, and she'll eventually have the slides for tonight in there as well, so you can start downloading them. I'm going to talk to you about Microsoft, that new young startup company that most of you have never heard of. It's a stock to study in April, and it's also in the ticker heat map, and it's also number 5 in the holdings for in the top 100 in Better Investing Community. It's already turned 50 years, so it's 50 years this year. Let's go to our next slide. So one of the things that I think a lot of people miss is that it's really good to, when you have a featured company, is to read the article, because this is sort of the background on what the people on the editorial security and review committee think of this particular stock. And here it is. They say, again, we know it's the largest marketer of software, but it also has gaming devices, content. It's also doing data center operations. It's also doing a lot of AI and cloud computing. And as it says in the final paragraph down below, it's like, despite its massive size, it's still putting out really, really good large results, much larger than you would expect for a company of this size. But anyway, it's just, normally I even talked with a few folks that they were like, Microsoft, and it's just like, no, there's some good reasons for it. Let's go to our next slide. So again, just to remind people, the Editorial Advisory and Security Reviews Committee, they're all people that have a charter financial analyst next to their name. So that means they are people that do long-term fundamental investing. And they did this on January 29th when the price was $442 as a stock to study. And now it's $359. So it's been down 18, almost 19%. But the question you have to ask, okay, was there something horrible that happened? Or do you want to be able to go like good old Uncle Warren Buffett says, you want to be fearful when others are greedy and greedy when others are fearful. So let's see if we should be greedy or fearful. And let's go to our next slide. I won't read you everything here. The image up there, those are the 3 CEOs that they've had. It's obviously Bill Gates, Steve Ballmer, and I'm going to butcher the guy's name, Satya Nadella, if I'm saying it right. Hopefully I did that right. But again, everything about this company, it's one of the big five in IT, all the metrics that we would look at in the better investing community, the financial health grade at Morningstar is great. This has got a wide moat with exemplary capital allocation. If you use manifest stuff, it has a great core score. There's just everything to be able to sort of point to this as being an excellent, well managed company. And that allows me to have a little bit more leeway in terms of my judgments going forward. Next slide. So the question really becomes, as huge as this company is, and I think it's the 20th largest in terms of annual sales revenue, is there more growth with it? That's the biggest problem that you have when you get a big behemoth like this. This article from the Motley Fool in October of last year says, asks where will Microsoft's growth be in the next 3 years? And the answer is they're really sort of building out in their cloud computing with the Azure and also with AI with Copilot. I'm noticing a lot more of that. And I'll talk a little bit more about it. But the bottom line is that it's not just Motley Fool that's saying this. If you look at a wide range of different analysts out there, there still is a lot of growth for Microsoft so that we can be a little bit more optimistic in our judgments going forward. Next slide. One of the things I always like to do is I like to look at the CFRA report. And if you go to page 2, this is for ones in which they have a star rating. They basically summarize on one page all the stuff that's been submitted to the SEC. So you're getting it without any of the sort of puff and stuff of marketing folks. And they just sort of put things together. So they have 3 business segments: productivity and business processes, intelligent cloud, and then more personal computing. Most of us tend to think in that latter group, but it's the other 2 that are growing the most, have the highest rate of growth, and are the largest percentage of the company. They did, complete a little over, was that about a year and a half ago, the $75 billion acquisition of Activision Blizzard, and that's a big gaming company. And again, they're really doing well there. It's the AI initiatives that are going on, whether it's through Office 365, cloud computing. It's very big in terms of business communication. I used it earlier today in my own job in terms of being on there. The other thing to keep in mind is that Microsoft is carrying 75 billion with a B cash on hand. So that's as of December 31st of last year. Next slide. So here's some presentations. This was at the close of their second quarter. Their fiscal year starts July 1. So this is the report as it came out in early January. And if you look at this, so here's their largest segment, the productivity in business. And look at how their gross margins are up over on the left-hand side with that star rating. And then look at this growth quarter over quarter, how much it is growing in terms of both the revenue and operating income where the second star is. So you're seeing a whole range of stuff. Again, this is Microsoft 365. This is their Azure stuff. It's LinkedIn. There's just a good, steady, regular income coming in from these things because these are all subscription based. And so you can see a lot of growth that's going on with it. And it's also leading to higher margins. Next slide. Here's the intelligent cloud. I'm sorry, this is where Azure is. I said it was with the other one. And again, you can see how much revenue is driving this. This is cloud computing. And if you take a look again where the star is over on the right-hand side, how much the growth is both in terms of revenue and in operating income. It's just booming. And so you have the 2 largest components inside Microsoft that consist of 80% of their sales. And these are the 2 that are growing the fastest. So this is a really strong indication that we can be much more confident in terms of our judgments going forward. Next slide. So here's some of the personal computing. This is their Xbox, some of the gaming stuff. It's kind of steady Eddie numbers and all, not super, super big numbers, but still revenue is going up pretty well. It's the operating income is not growing as fast as it. So they don't get the revenue from this as they do from the other ones. But again, it still provides a key component of their growth. And this is about 20% overall of their entire company. Next slide.
5 minutes, Kevin, 5 minutes.
Thank you. So I forgot to mention it on the first image. I was showing you sort of the up, straight, and parallel that we would see if you were on the, again, in core, we go step by step. So the first one would have been analyze growth. The third step gives you basically the same visual analysis that you would see in Plus. But here, let's just sort of look at the key management metrics. And Rudy talked about it in his company in Brown & Brown. And I'm going to show you 3 of the 4 here. So here's a pre-tax profit margin. I always like to put the break-even point, and guess what? This break-even point is way off the chart down below. That's a good sign. This is just solid, solid growth. And if you look where the yellow highlight, Microsoft, it is far and away the best out of its competitors. I don't know if necessarily Block is really a direct competitor to them, but the fact of the matter is that this is the one that's really driving the growth all along. And those are really, really good numbers. Next slide. Here's the historic return on equity. This is one, if you look at it in Plus, it's going to be probably red. Again, look where the break-even point, it's down below there. But again, the thing is that the last year, the return on equity was only 34, almost 35%, and the 5-year average is really close to 40. So if you're going to get a red metric on that on your Plus, and we tell you that if you get something into the high teens, you're doing really well. So you're really kind of quibbling. Yes, technically it's down, but these are still phenomenal numbers. And remember, as I told you before, really good financial metrics in terms of everything else that's going on. So I'm not really worried at all with this. If it cratered by half, I'd worry. Next slide. Here's debt to capital, and of course, the lower the better. And look at this one. It's kicking everyone else's butt in terms of how much their debt is going down and that they're still being able to grow this company. So they got the best of all worlds. They have enough money to be able to buy back shares, to be able to sit there and give out dividends, to be able to take care of their debt, and still have enough to be able to grow their company. This is the perfect sign of what's going on with it. Next slide. So if we
2
look at
minutes,
things,
Kevin, 2 minutes.
thank you. If we look at this, the 10-year average is 13.1. If I looked at the most recent 5 years, it says historic earnings per share. That's my mistake. That's a 5-year historic sales is 14%. And I'm forecasting at 13%. But again, with the numbers in terms of how they're doing, this is a really, really good, strong number that it can hold up, even though this is a behemoth of a company. Next slide. And again, I made the same mistake here. This is historic earnings per share. That 10-year historic shouldn't be sales. That's a historic earnings. And then the 5-year historic earnings per share is 17.6. I'm only projecting 13. I could have very easily had raised this thing much higher, but I just sort of went with 13 and 13. I don't think I'm being too cautious, but I clearly could have been more optimistic on it. And I think with some of the growth stuff, excuse me, I could have done that. Next slide. So with the, excuse me, got a frog in my throat there. Anyway, if we look at the historic high PE, I dropped it down from 36. I'm at 33, but I still get this as a very strong growth company. That's, if you look at that 826.30 over on the right-hand side, it's over double what the current price is at 359.80. So I'm being cautious. I don't think I'm being conservative, but I'm being cautious, and I'm still getting something that looks really, really good. Next slide. Here's a forecasted low, the same thing. I dropped my low from the 5-year average of 24 down to 20, and I get that around 248, which is the number I used. It's really good for a growth company or basically one that's up straight and parallel. Microsoft is up straight and parallel. I'm below the 80% of the current price, which is 287. And again, like I told you at the beginning, this was featured at the end of January at like I think it was like 442. It's dropped a lot really in this last week or so, or 2 weeks at 359. This to me, if we're talking about being fearful or greedy, this is one where we can be greedy because I think people are running away from something that's really well positioned. Next slide.
1
So
minute, Kevin, 1 minute.
there we go. So if we look at this, I have it as a buy. The buy goes up to 392. And if you look at this, it ends up having me that I have a upside downside ratio. I forget, I'm not seeing it there. I should see it. Where is it? I probably have it on the next slide. Again, with core, it's over on the other side, but I think I'm somewhere in the 5.4 to 1 upside downside ratio. Next slide. So my conclusion is, even though it's a very large size, it's a large size company, it's very steady growth, above average metrics. Yes, we can quibble about their return on equity being down, but it still is the industry leader. And if you look at the PE ratios on historic data, it's undervalued. If we use forecasted, projected data, it's undervalued. It's got a buy. It's a buy up to 395 according to my SSG, and it's at 359. It's not often that you get a company like this that has a wide moat, exemplary capital allocation selling at a discount. This is a time, and as I said before, now's the time to be greedy because other people are fearful. That's it. Next slide. So now we're going to look at two stocks in plus, and let's introduce Dan Parker here. Dan is our 40th different presenter in this program. Thank you, Dan. And the 15th different club to be featured. So you're going to tell us all about Hershey Company, and then afterwards, Richard's going to be able to tell us about Eaton Corporation. Dan, take it away.
All right. Thank you, Kevin. So as mentioned, I'm Dan Parker, DC chapter, part of the MIT Club. I failed to mention earlier that we're primarily located in Northern Virginia, in the Dulles region near Ashburn. That's where most of our members reside. But tonight I'll be talking about Hershey, the Hershey Company. Hershey is located on the New York Stock Exchange with a symbol of HSY. And next slide, please. Okay, so where I found it was in the BI magazine in the April edition. It was on page 21. It was listed as an undervalued stock for 2025. It was also previously featured before, back in September 2015, as an undervalued company. And then in 2021 of August, it was listed as a stock to study. And it is ranked 134th in the 2024 top 200 survey of BI member holdings. Next slide, please. So Milton Hershey founded the Hershey Chocolate Company back in 1894 in Hershey, Pennsylvania. Many of you may have heard of Hershey. That's where the Hershey Park is, and they have a couple of other enterprises there in Hershey. But going back to 1900, that's when he sold his first candy bar. He started out making caramels, and then he realized that there was more money on the chocolate business side, and so he switched over and started with the chocolate. So in regards to Hershey, it's the leading U.S. confectionery manufacturer, and that's in a $25 billion market. Hershey controls 36% of the domestic chocolate space, and it's in the industry of confectioneers. It is a large company with over 10 billion in sales, and Morningstar is giving it a health financial grade of B. Next slide, please. Okay, so the company structure. So there's three core segments, and that's where the business performance is reported to those individual segments. There's the North American confectionery, there's the North American salty snacks, and then there's also the international. So in breaking those down a little bit farther, the North American confectionery handles the traditional chocolate and the chocolate candy business in the United States and Canada. And then in regards to the salty snacks, It's primarily consisted of the salty snack products and other savory items such as the pretzels that they have. And then in regards to the international, that's all other operating segments outside of North America. So those are the three the three core segments that the company has migrated to over the past 131 years. Next slide, please. So primarily, Hershey makes money by selling chocolate. That's what they do. They sell chocolate. All the iconic brands that we know and love. Kit Kat, Hershey's, Reese's, Kisses. I mean, I could go down the line, but it'll probably take too long because they have over 100 brands. The 100 brands is sold in over 80 countries. And basically the United States and Canada represent the largest portion of sales and profits. One thing I'll also mention is, in addition to primarily selling just chocolate, they also sell sweets, or they also make money from sweets, which is non-chocolate candy, and also from salty snacks. So that's the iconic brands. I think everybody has probably at one point in time or another experienced the one in the silver wrapping to the right, especially around about 2 o'clock in the mid-afternoon. Those come in very well. Okay, next slide, please. So a few 2024 facts about Hershey. So it is reported, Hershey reported 11.2 billion in net sales in 2024. They were the #1 U.S. snacking. They were number 2. I'm sorry, they were ranked number 2 in U.S. snacking sales. They were ranked #1 in U.S. confection. They have 20,000 employees, and then over the past 7 years, the average annual rate of return in investment is generated, taking into effect of compounding. They reported 10.7%, which is fairly good. Next slide, please. Okay, so now we're going to take a look at the industry and their peers. So the global confectionery and snacks snacks and packaged goods industry is intensely competitive, very competitive. It consists of large private companies and large retailers. And those large private companies and retailers have significant resources and substantial international operations. Hershey, in order to keep track or to protect their existing market share and to also capture increased market share, they've identified 2 key items or actions from a risk management perspective. So one is that they may have to increase their expenditures for promotions and advertising to keep track. And then also they have to continue to introduce and establish new products so that they can remain competitive and remain protective of their market share. And we'll see that in the form of different buyouts where they acquire new companies and the like. Next slide, please. Okay, so here I wanted to just take a look at the industry averages and the peers and do a little comparison. So as we take a look at the comparison there, we'll notice that down on the industry average, the growth percentage is about 2.5%. It's really at about the same for the peers. Okay, and in here we compared to Mondelez International, Nestle, and Kellogg, and they were all around 2.5%. But if we look at Hershey, we'll notice that they're up about 5.4%, and we can see that their historical sales have steadily increased. If we look back through the 10 years starting at 2015, it's been on a slight increase, going up and coming up through 2024. I will point out that the Mondelez International did make an offer to buy out Hershey, the Hershey Company. And actually, that just happened this past December. However, it was rejected. But this wasn't the first time. This was the second go around. They had tried to do this once before, and they were rejected, and it didn't go through that time previously. And then they've just now attempted to do it again this past December, but it was also rejected. Hershey is pretty much controlled by a trust fund. And basically, the trust fund has a very, you might say, a tight grip on everything. And basically, they're pushing and keeping Mondelez away from purchasing the Hershey Company. Next slide, please.
5 minutes, Daniel, 5 minutes.
Okay. So as we look at the next slide, we'll first notice that our indicator of a good growth company starts out with the chart. And as we examine the chart, we see that sales are increasing. We see that the rate of sales and EPS, earnings per share, is steady and consistent. And we also see sales and EPS growing at almost the same rate, fairly close. So basically, our first indication that it is up straight and parallel. The last 5 years of historical sales growth was 8.9%. And then the recent quarterly figures in sales was 8.7. However, Value Line shows the growth at a 7% projection in 3 to 5 years. We took a look at Zacks. Zacks had it at a 3.01 and Yahoo had at a 2.7. In looking here in the red box at ACE, the analyst consistent estimates, it had, excuse me, had a sales estimate of 2.6. And so in the projection, or I'm sorry, in the forecast, I went with a 3.4 as a conservative, reasonable forecast due to a couple of items. So number one, chocolate prices are rising due to soaring cocoa prices. Most of the cocoa and the chocolate comes from West Africa. It produces a large part of the cocoa for the world's consumption, and that's playing a significant role in the prices. Also, there are some factors like disease and climate change and some other supply shortages that's playing effect. So that's what I went with on the sales. In regards to the EPS, the earnings per share, the last 5 years of EPS growth was 15.1%. The recent quarterly was 130.6, and the ACE had a 0.6%. Value Line had a 7% forecast in 3 to 5 years. Yahoo had a 9.29. Zacks had a 4.60. So as I looked at it, I wanted to be a little conservative just because of the uncertainty. And then nowadays with the tariffs and this, I went a little conservative and went with a 3% for the historical EPS. Next slide, please.
2 minutes, Daniel, 2 minutes.
Okay. So as we look at the return on equity, everything, the pre-tax profit on sales is trending in the right directions. It's trending up. The debt to capital is trending down. Those are good. One item I want to take just a little closer look at was the return on equity. It's trending down. However, it's stabilizing and it's in a better position than the peers. I brought up the peers here just to get an idea of the comparison. And as we can see, our ROE for the Hershey is trending down and stabilizing. Next slide, please. Okay, in the current versus historical, basically, as we look at the 5-year average for the high PE is 26.8, and the low was 19.2, and the current price earnings ratio is 14.9 compared with the 5-year average of the PE ratio of 23.1. Next slide, please. Okay, so as we started to crunch out the numbers, we came up with a forecasted high price of 316.5, and we came out with a selected low price. We went with 133.7, and that gave us and put us in the buy zone. Next slide, please. Okay, and as we can see here, it gave us a 5.4 to 1 upside downside ratio with a total return of 16.3 with a projected return average PE of 12.3. We have a price buy to satisfy the upside downside of at 171 162.6. And today's current price is 162.24. Next slide, please. Okay, so in conclusion, the Hershey Company is a large-sized, moderate growth company. It's well managed. It is underpriced, trading at its 5-year average high PE. Trading below its 5-year average high PE. Hershey has an estimated total return of 16.4%. The upside downside ratio was 5.4 to 1. It is a buy up to $171.60, and it is a worthy candidate to purchase. Thank you, and that concludes my presentation.
Daniel, thank you very much for your presentation. You did so well. We're going to bring you back. This is what you get when you do a good presentation. And that's exactly what we did with Richard. Richard presented back in November, and he's back for a second time to be able to tell us about Eaton Corporation. Before we do that, I want to let you know that we now have the slide presentation in the handout, so go ahead and take a look at it there. And also, Brian Koenig, go ahead and take a look. I sent you a chat and see if you can help me out with that. So with that, Richard, why don't you tell us all about Eaton Corporation?
All right, I'll try to do that in my second attempt, but batting in the fourth position tonight. So I feel
You're the
like
cleanup hitter. You're the cleanup. We want you to bring it on.
Which is, well, we'll find out. I am the treasurer at the Blue Chip Investment Club, and so my head is just full of numbers. I might not have as many graphic slides as there are number slides, but you'll understand as I turn you on to the company known as Eaton, ETN, on the New York Stock Exchange. They are number 169 as far as being in the top 200. It's the first time they've been listed in the Better Investing Top 200. Next slide. Unless you've been living under a rock this century, there's a good chance you've caught wind of the digital AI revolution. I wanted to take a look under the surface of AI and visualize the artificial intelligence industry from a different perspective. AI lives in the clouds thanks to the infrastructure that supports it on the ground in the data centers below. Next slide, please. So I was looking underneath the rock of artificial intelligence, and I was looking in the infrastructure industry, and along came the Better Investing magazine for March of 2025. And in this edition, and this being the cover story, if you go to pages 37 through 40, you will find this cover story information about several AI-empowered industries. And one of them is Eaton, which is, as I had mentioned to you earlier, is number 169 in top 200 companies held by Better Investing members. Next slide, please. Eaton began riding the coattails of the automotive industry back in 1911 and has been listed on the New York Stock Exchange for more than a century. As technologies and markets have changed around the world, Eaton has adapted and evolved. Moreover, Eaton has paid dividends on its shares every year since joining the stock exchange in 1923. Eaton's operational headquarters has been located in Cleveland, Ohio since the 1920s. It was reincorporated and established a head office in Dublin, Ireland, to reduce their U.S. corporate tax burden. Next slide, please. Eaton helps companies gain a competitive advantage by managing power more efficiently, effectively, and sustainably through its two main segments. Now, you'll read, if you do a little bit more research in Eaton, that it's got 5 exact segments, but they can be lumped into 2 main ones, and that would be electrical and industrial. And speaking of bullet number 3, powering mobile and stationary equipment more productively, Eaton has developed partnerships and collaborations with Kevin. You'll be nice to know that it's Microsoft they have a relationship with, and they also have a relationship, according to the article, with Better Investing with Palantir and also with Tesla as they grow the data center market. Next slide, please. Eaton serves over 90,000 customers in 175 countries using all of these different corporations and companies. Next slide, please. Eaton is a values-based company committed to doing business right. It's more than just a philosophy, it's evidenced by the acknowledgments around the globe. Next slide, please. Major infrastructure projects are mega projects. Now, mega projects, according to some, are those projects that are valued at $500 million each. And so far, since January of 2021, there have been only 4 years in which mega projects have been announced. So far, only 15% have broken ground for construction. Eaton has 40% win rate to supply the electrical components needed for these mega projects. Pay attention also to that slide that says cancellation rates. I'll bring that up later, that 11% mark. Next slide, please. There are several major trends supporting growth, but they are all driven by the increased demand for electricity in data centers and infrastructure development. For Eaton, electrical orders were up double digits in the past 12 months. This surge helped the backlog grow to a record level, which should carry over strong momentum in the coming years. I should mention at this point that regarding data centers, Dan mentioned that his MIT club operates near Ashburn, Virginia, and Ashburn is where data centers thrive in the state of Virginia. Next slide, please. Global trade wars have impacted Eaton's stock price, which is now 35% below its 52-week high. In addition, investors have become concerned about cancellations due to supposedly cheaper artificial intelligence solutions. Historically, cancellations are about 11%, but recent levels have been below this level. Demand for electricity and its related required infrastructure is bright, given the trends in computing and electrical vehicle transition. Due to the time required for permitting permitting and construction, these projects are fairly insulated from general economic softness. Eaton has since become an industrial powerhouse largely through acquisitions in various end markets. They receive favorable tax treatment as a domicile in the country of Ireland, but it generates over half of its revenue within the United States. Next slide, please.
5 minutes, Richard, 5 minutes.
I'm a numbers guy, and here's a bunch of numbers regarding financial history and growth rates. Sales climbed close to $25 billion in the most recent fiscal year. Just about every column shows an increase. Next slide. These financial percentages and ratios show Eaton's strength in business operations and profitability. Notice the profitability shown in the two top lines, the pre-tax profits and the earned on equity numbers. Pay attention to the middle column, high PE, in the one below where it starts with 35.4. If you add those 5 up and then divide by 5, that average is 33.3. Next slide, please. I bring that up because, and my apologies for the clarity on this slide, but the I chose where it says average high PE. That was my choice of 30. That's because the average number was 33.3. Value line says that going out for the next 5 years will be 25.0. I split the difference and made it 30. I used value line's number for its estimated high earnings share of 17.20, which gave me a forecasted high price of 516. I chose the selected forecasted low price of 200. You can see the numbers that they were calculated there. I chose it 200 because based on the current trend and what's going on with the markets and AI stocks. So based on all of that information, 5.8 to 1 upside down ratio puts us in a buy zone with its current price today closing at around 252 with a potential price appreciation of almost 110%. Next slide, please.
Two minutes, Richard, 2 minutes.
Right. So the investors have a better entry point right now. Eaton has been overvalued according to Morningstar for the past 18 months. And also regarding these strong trends, in the total accessible market, which I don't have a slide up here for that. I wanted to make a last minute change, but I was a little bit too late on that. So the total accessible market for the US data center market is 10.7% going out to 2030. Next slide. So Eaton, ETN, is a large size, steady growth company. And when I say they are a steady growth company, they are one of 32 companies that have been a part of the New York Stock Exchange for more than 100 years. They are a fairly well managed company. They may be right priced to buy shares now because the market has corrected itself and it is now not an overvalued stock. ETN is a buy up to 278.10, and it needs to be a candidate on your watch list.
Thank you very much, Richard. And you were a great cleanup hitter. So you did so well. Just like Daniel, we're going to bring you back.
All right.
Anyway, yeah, so let's do a recap here. So we have 4 stocks here. We like to sort of put where it fits on T. Rowe Price's life cycle. So we'll be looking at, again, Microsoft, the Hershey Company, Brown & Brown, and Eaton. And let's go to the next slide, and we'll have all the presenters tell us where they fit. We'll do it right in order. So I'm with Microsoft. Even though it has really good growth, I just think it's so huge. It's somewhere right in that explosive, right near mature growth. I think there's a lot of opportunity going forward considering how huge it is, but I think there's still a lot of great opportunity with it. Rudy, why don't you tell us about Brown & Brown and why you picked that location?
Yeah, I picked Brown & Brown and mature growth because I think they have significant growth ahead, but I don't think it'll be as steep of a slope as in the past. And so that's why I put them where I did.
Okay. Daniel, tell us why you picked that location for Hershey.
Yeah, so where Hershey is located in a very nice spot. Is that kind of at the top of all the confectioneers in that industry. Their numbers look really good. And right now, it just seems like they're in a position to grow. Even though they've been around for a long time, they have the runway to do some growth and advance in that perspective. So that's why I picked them at the mature growth level.
And Richard, tell us why you have that location for Eaton.
And I would follow up Dan's statement in the same method. I believe that Eaton has been around a long time, and they have grown over that long period of time. But its best investment opportunity, I believe, is right now because of the opportunity that AI and the electrification movement and the work with data centers. I think that's it's in the place for some explosion in the next 5 years.
Thank you very much. Okay, we've been chatting for over an hour. Let's go to the next slide. And now it's an opportunity for you to vote. And again, it's not so much which one you think is the best buy, but rather which one intrigued you enough that you want to do further research on your own. Remember, we're trying to get you to be able to look at stocks yourself so that you become a better investor. We can release a poll. Cheryl, I don't know if you can do it or we have to have Kent do it. There we are. Our poll is released. It doesn't cost anything to do it. Go ahead and put a vote in there. And while we're doing that, I put a chat in the chat box. We're looking for someone, a new presenter, to be able to jump in on June 2nd to be able to help do one of these presentations. And we'll give you mentoring. We'll show you how to do it, a little one-on-one time. So if you're willing to take stuff to the next level, please volunteer, particularly if you're a Marylander from the District of Columbia or a Virginian. And let's see how we're doing. We have 70% of you voting. Oh, we have a close race here. We won't tell you who's doing what, but keep voting. We're at 72, 74%. Can we get up over 80? And again, please make sure to download those handouts that are there. Again, you can share them with anyone else you have. Is it moving? No, it's saying, let's see if we get one more vote. Can one more of you vote? We did. Okay. I think, go ahead and let's close it out, Cheryl, and let's share it with everyone else. And there it is. They like tried and true Microsoft, but I tell you, Eaton, you gave it a really, really good run there. So way to go. We may actually give you bonus points for that one, Richard, because that's close enough in our mind in terms of that. While we're doing this, Cheryl or Rudy, can you see? I don't think I saw too many questions in there. If you want to ask anything or if you see any comments from there, Cheryl or Rudy, if you can just sort of read them out. And then if you want to, you can raise your hand and we'll open up the microphone and you can ask anything of any of the other people.
The comment that I saw, Kevin, dealt with what would the tariffs do with the cocoa imports from Africa?
Dan, do you have an answer on that one?
Yeah, so it could potentially increase the price.
Okay. Anything else we have, Rudy? Any hands up?
I'm pushing too many buttons here.
Yeah, that happens. You have the power now being in the background. You get to see all these things. So there you go.
The same thing would probably be true for Eaton because they deal with the equipment that they build is made of the steel and aluminum, and in order to build the racks needed for the electrification, will probably be some impact in that regards.
And there is a question for Dan. Well, first I'll make a comment, then a question. The comment was that Mr. Hershey did not believe in advertising. He said the best ad was a Hershey wrapper on the sidewalk. And the question, Dan, is Mars not a player?
So Mars is a player, but they're privately held. They're not a public company. but they are one of the competitors. Like, so when I brought up the peers, the tool would not bring up data for Mars because they're not a public company.
Yeah, also in answer to the question about how tariffs are going to affect this, some of the other countries that currently buy American products, such as Hershey, may be looking to go to another country to up their sales rather than deal with somebody that's putting tariffs on them.
Okay.
We also have a couple of questions, or actually a couple of hands up. Both Gladys and James have their hands up. So Gladys, I'll unmute you, and if you would like to unmute yourself, you can go ahead and ask your question. And then James, you're next.
I'm sorry, that was an accident. I just wanted to say, I thought you all did very well. I liked the presentations. I thought each one was very thoughtful. Thank you. I didn't have any question. It was an accident. Thank you.
Understand. Thank you. Thank you, Gladys. James, if you'd like to ask a question, feel free.
Sure. First, I want to thank everybody. I thought the presentations were very interesting and insightful. This is my first time on in this forum, and I had a question for Richard. Usually, what I ask, I'm a member of Blue Chip too, along with him. I had a question about the past and the future sales growth and earnings growth for Eaton Corporation.
You want to take that, Richard?
You have to unmute.
Did we lose you there, Richard?
Yeah, he's
up there.
And do I need help unmuting?
You're
It was
fine now.
telling me
You're
that
good.
it was telling me that I was muted, and now I'm unmuted. So I don't have the slide deck in front of me. My apologies. So but from my research, I showed that over the past 5 years that sales in Eaton had been on a steady stream upwards, and that in using value line to project outwards, I saw that there is certainly room for continued growth.
Okay. Am I still muted?
No, you're
Nope,
good.
Okay. Yeah, usually Value Line has the 5-year projected for revenues and for earnings, or sales and earnings.
Right.
And it
And-
usually gives a percentage.
Right. So for moving, are you talking about moving out the sales?
The past 5 years and the future 5 years.
Past 5 years, 3%, and the future 5 years, 7.5% for sales. For earnings, 12% for the past 5 years, and 11% for the next 5 years.
Okay, thank you.
Well, Richard, you're right. You did bring in some of your blue chip members. I see a couple other names from there. And again, I see we have 15 different presenters that are in the audience or in the back room here. So thank you for all of you that have helped out with that. And I see a lot of people from either Dan's club or from Rudy's club. I see some of your members here, Rudy, as well as Richard. So any other questions that we have? Do you see any more, Kent or Rudy?
No, we're clear.
Okay, let's close this out, Cheryl, and let's finish the rest of our stuff. If you have any other questions, you can be able to reach us here. at diggingintobi at Gmail. There's also the link for both the DC chapter and the Maryland chapter. Again, this is a joint program of both of us. There's a picture of many of us that were at the BINC last year. And again, thanks to all of them for helping out. Let's go to our next slide. And if you want to be part of our community, the DC chapter will send this out to you. We won't bombard you. You don't have to be a member of the DC chapter. You don't have to be a member of Better Investing. Just put your email in there and you will get the notices on this so you won't forget, you won't miss it. Next slide. This is you, Kent.
All righty. So I have a question for all of you. Actually, I have several questions for you, all of you. Do you want to increase your investing results? Do you want to improve your investing skills, research skills, and judgment? Do you like talking to other people about investing? Do you enjoy helping others get better and become better investors? And then do you like free stuff? If you do, volunteering is a great way to answer all those questions, yes, and get some results out of those questions. So we, as Kevin pointed out earlier, and as Cheryl and the rest of us have pointed out, we're all volunteers here, and we do this work because we do enjoy it. We enjoy talking with people and learning. We enjoy learning about investing ourselves. And so this is a great way to improve our investing skills, as well as get a chance to get some free stuff like the online data feed, access to the Better Investing online tools, as well as getting discounted rates to the BI National Convention and various other things. So anyway, great place to be, and great things to have if you're interested in such things.
Thank you. All right, so here's the ones that we're going to be looking at for next month. We already have the Stock to Study, CACI International. The undervalued feature is a next era energy. And then we have two more. We're going to do Green Brick Partners and Waste Management. I think they both show up in the ticker heat map. So those are the stocks we're going to be looking at on the first Monday in May, May 5th. Please come back and join us. Please share this with you people in your club. Again, I see a lot of people from outside our area. Glad to have you. Please spread the word. We're also just trying to be able to build out the group of folks in Maryland, DC, and Virginia, and we've been doing really well. And if you're in that area, please stay in touch with us. We're doing club visits if you're in Montgomery County, Maryland, DC, or Virginia. And I'm sure the Maryland chapter, Cynthia, I see you're online here. I know you guys have been doing it as well. A great way to connect with people in our community that are nearby. And also the Maryland chapter, like I said, they have that wine tasting, wine night and talking about investing in Laurel, Maryland. So take a look at the Maryland chapter for that as well. Any other questions or anything else we see? All right, let's go to the next slide. So we also have stuff up on the Manifest dashboard. You don't have to be a member of Manifest. You don't have to have a subscription, but we sort of track all these things in there. I'm a little reluctant and a little slow in getting up the 2025 selections, so we'll get those going up here pretty soon. But anyway, here's a way to sort of take a look at it. We're really glad you're here. Our audience is growing. We appreciate all of you being here. And again, look at those stocks that we're presenting in May. Do your own study and come back so that we can be able to have good conversations about what we're seeing, just like we would in a club. So thank you for joining us for digging into the BI. Let's do one more slide. I think I have the links this is where all the links are for Manifest. Please make sure to download these handouts. And again, you can share them with other people. Next slide. And this is, again, the underline for up on the YouTube video. This will be up either late tonight or early tomorrow. So please take a look at it. We're glad you're here, and continue to dig into the BI, and you too will become a better investor. Good night, all. We'll keep this open so that everyone else can see it. And people in the back room, if you leave, but don't end for all. Thank you, Dan and Richard and Rudy. Great job, all of you. Cheryl, glad you were able to help us out from Florida, or you're in Georgia, I think, tonight. And
No, I'm in Florida.
you're Florida, and we have Mr. Alabama and Kent. So we're covering everything up and down Southeast.
Outstanding. It was great. Thanks for giving me the opportunity, and thanks, Cheryl, for all your help.
I'm glad to have helped you, and you did a terrific job.
And
So here you go.
Cheryl, Kent, and Kevin, thank you very much. I enjoyed it.
We enjoy you too, Dr. Watson.
Oh, I had a technical difficulty too. Right before I presented, I spilled water all over my notes.
Oh, perfect.
Brian, did you have something that you wanted to say?
I just wanted to see if Kevin had anything he wanted something, and I hope I sent him the right thing.
No, you did. You got the right stuff. So thank you very much, Brian. And thank you again for stepping up. Bhaskar just sent us a notice this morning or this afternoon that he had to travel. So thanks for switching with him. Much appreciated. And yes, I do owe you something.
We all do, Brian. Thank you.
I want to say I like that idea about the wine tasting night. I think that's a great idea.
Do something down in Virginia Beach. Get some other people. It may draw a few more folks in there.
We might have to move it from Gus and George's to actually on the beach.
There you go. That sounds even better.
Yeah, do it at sunset. That would be really nice.
You may get me out of Baltimore to head down there.
All right.
And Cheryl, Dan says that he'll join Susan and me for the for some of the club visits. He wants to see how it's doing. So we have one for next excuse me, next Monday that will be virtual. Right. So Dan, I'll get you linked in on that one too. So great. Really appreciate all your efforts, Dan. Great job.
Yeah. And by the way, Cheryl and Kent and Kevin, thank you guys so much. This was a great learning experience. And I appreciate the mentoring and coaching you guys have provided very much so. So thank you guys for that.
Yep. So for those of you that are
still out to other attendees that we can help you out as well.
Cheryl, you took the words right out. This is exactly why we do this, is that we can be able to help you become a better investor. We're not going to just throw you out here to the wolves. We're going to coach you, mentor you, wherever you need help. If you have any questions, we can work on that. So please don't be afraid. We're here to help you and make you a better investor.
That's
All right. Thanks. And I look forward to just next Monday night going out and watching and seeing how that's.
It will be virtual, so we'll just do that. I just have to get my camera finally working. I may have to break down and send it to someone to get my camera to work so that folks can see us on the club visit. I think it's important for those things for them to see what you look like.
Okay. Do you need me to do a go-to-meeting?
I think they may have one. I'll check with them. Other than that, I can also do one through MCMC, Zoom? Through their license.
Oh, okay. Oh, that's right. They do.
So,
Richard?
Well, I'm going to sign off, everybody. So good night. Have a great rest of your evening.
Good night.
Is Richard still there?
I'm still here. Richard's still here.
This is Brian Koenig. I see that you're down in Virginia Beach. I usually go down there over the New Year's and to visit friends. And what I'll do is when I'm coming down there, I'll send you an email ahead of time, and maybe we can get together and you and some other members of your club and talk some finances somewhere.
Oh, okay, that'll be pretty good. I live actually out in Suffolk, Virginia, which is about 30 miles from the beach, but you know, it's a big, wide open territory here.
No problem. We usually stay at the timeshare on the beach, but I can get away from there and head west with no problem.
Outstanding. That I'll look forward to that.
All right, we'll see ya.
Thank you, Brian.
No problem.
All right, I think we're down to just a few folks. So if you haven't gotten your slide deck by now, sorry, man, you missed it. So good night, all. We're going to let
Right.
everyone go and enjoy the rest of your evening.
Good night.
Good night.
Right.